I've just clicked it for you. For us
Oh,
all.
there it is.
Yeah.
Perfect.
We're good to go.
Ladies, gentlemen, and these days I should say machines, welcome to the afternoon session. We have a wonderful slate of panelists here. We're going to be talking about navigating the market and remaining competitive when all data is ubiquitous. So the world is awash with data. We were just chatting before we got on the formal session. On the one hand, information assurance is a problem. The quality of information is coming down, but there's a lot of data. So how do you sort of make sense of it? So one of the things early on, folks used to talk about the genesis of alternative data, right? It was around counting the cars in the parking lot, if you will. So very traditional for security selection, and in particular to use sort of a Ben Graham analogy, sort of deciding whether, from a weighing machine perspective, right, is that stock going to have added earnings, added revenue, and so on. So that's what it was. And these days, I think alternative data can be used more on the voting machine side with the whole flow and so on. So that's one unique way to use it. The other unique ways are, for example, asset allocation for risk management. I think Toby will address some of the macroeconomic aspects. We have two, if you will, producers of data and insights, alternative data, alternative insights. That would be Toby and Stephen. And then Sylvain is a very knowledgeable consumer. So some of the things we'll get into are whether we want data in its raw form, whether we want more processed data, and so on. My role these days is slightly academic on the adjunct side, but I've been a practitioner for a few decades. We were early with using both alternative data and neural nets, alternative techniques, if you will. We sold that unit to State Street Global. I've worked with SAC Capital as a client, Paloma Partners in terms of a joint venture we had, and then with some of the marquee investors like ABP, the Dutch pension fund, GIC in Singapore, and the John Deere pension fund, Florida SBA, and so on. So have been both a producer and consumer of alternative data for portfolio management. So without further ado, let me start with my panelists. I think we're going to go west to east for an initial introduction and foray. So Steve, take it away.
Great. Well, thank you. Pleasure to be here. So my name is Steve Weinstein, and I am the Chief Strategy Officer at MScience. We are the pioneers in data-driven research. Our clients are primarily institutional investors, although we have a rapidly growing business providing data and insights into corporations as well. The way we've run the company for a long time now is with the core belief that raw data or just providing a data dump to clients would not be particularly useful. In fact, we thought it could be time consuming and harmful and even potentially even creating some chaos for the client. We believe that the value of the data was limited to your ability to ask questions of it and your creativity, and then put everything into the proper context. So as a firm, we've made big investments in having an analyst layer that provide insights to what's happening in the data. And we provide those insights to our clients, both in terms of written research forms, as well as, visualization tools. And, it's our view that, that is what allows people to really extract the maximum value from the data and how we've tried to position ourselves in the market. I'll hand it over.
Toby, please go ahead.
Yeah, thanks, Ganesh. My name is Toby Dayton. I'm CEO of LinkUp, and we are the global leader in delivering job market information to the client segments that we serve. We're focused specifically on labor demand data. So what we do is go out every night and we're indexing jobs directly from company websites around the world. So the data it's indexed every day, again, directly from company websites. We don't aggregate jobs from job boards and other sites. It's directly from the employers themselves. So with that, the data is updated every day. We eliminate duplication and what we call job board pollution. So we're delivering very, very accurate, real-time and powerful and predictive signals, delivering insights into the labor demand at a macro level, at a sector level, geographic level, and then down to the individual company level. So with that, we're again delivering a wide range of data solutions that I think we'll probably cover at some depth in the conversation.
Sylvain, go ahead. I know you're on the buy side now, but you are also with a larger organization, right? BlackRock.
Yeah.
So feel free to
Yeah.
chime in.
Exactly. So I started in the buy side in 2011. Before that, I was a faculty in the US at UCSD, and I think the context is when I started in long short quant equities, people were sort of using four main data sets: price, volume, balance sheets, and analyst data. And then there was a huge change, right? I rode the wave of the increasing number of alternative data sets, macro data, consumer data, geolocalization data, and so on. And now I work at Capital Fund Management, which is a large hedge fund based in Paris. And we've been known for years to produce really high quality primary research with our chief scientist, Jean-Philippe Bouchot. And in terms of this is how we think about how we use data, how we consume data. We take, raw data. So in some sense, we're the opposite of what Steve was describing. We take raw data and we try to extract ourselves the insights that go into our trading models, into our prediction of returns, and we do the whole chain ourselves. So from data scouting to data ingestions to the trials and to the portfolio construction and the trades that we make. So we can come back to this, but I think that chain has changed a lot, basically with the availability of a lot of new data sets.
Yeah, I know we have a few dozen participants in the audience. So audience, feel free to put your questions in the chat and we'll take them in a little while. We're going to go around with some themes. I have some questions for the panelists, so we want to keep this interactive. So feel free to put your questions in. But Toby, in your case, you have data that can be used for multiple asset classes. Do you want to sort of talk about how people are using it potentially? I know some of it's probably proprietary, but is it more for asset allocation? Is it more fixed income folks are now growing in popularity with respect to your data use? So if you want to sort of chime in on that, that would be useful.
Yeah, so we do our product really, it kind of runs as Sylvain said, sort of, and between Steve, sort of the bookends of raw data and very refined data, and we really cover that entire gamut. So it is the product. We've been in the data business for about 10 years initially, working with companies in the human capital management space. Our origins as a company go all the way back 20 years as a recruitment advertising and essentially job site for candidates and employers. And we started using our job listings data from company websites about 10 years ago, and then developed eventually, once we started to see really significant use cases in and around the capital markets. Actually, our initial use case was forecasting non-farm payrolls. That led us to start to develop our first product that we brought to market, and first revenue streams in the capital markets were selling a raw product. And the origins there were very much designed and geared towards back in 2014, 2015 for large global systematic quants. And then over time, I've started to expand down into analytics and more and more refined products. And now, for example, through a partnership with S&P, we've developed an index around the S&P 500 measuring labor demand. So very refined products up and down that spectrum. And very distinct signals at the other end of opposite from raw. Likewise, we've also expanded, initially started out very much focused on equities, but that too has expanded into other asset classes and a lot of different trading strategies, investment strategies, and now moving into fundamental and discretionary asset classes, moving into credit and private equity. So it really has, very consistent with the explosion, broadly speaking, across the entire industry. We've continued to expand and along with the industry into a wider variety of users and use cases and asset classes.
Yeah, thank you, Toby. That's helpful. Steve, where are you seeing sort of increased demand, or folks now shifting into not only alts, but is there demand for alt data for crypto, for instance?
Yeah, so there's an explosion in the growth of data that's available, and a lot of the time we spend is just trying to kind of filter through it all and identify what is the most useful, and that really comes down to not is it new data, but can I answer new questions with this data, right? Because the data source may be different, but maybe it's not helping me make a more informed decision. So when I roll that back, I would say that transactional data is still king. It's still the most powerful data sets that we've looked at. It's probably because we can do the most with it. We can answer the most questions. We can get the most actionable types of insights from that data. But the sources of that data are starting to change, and that's changing due to I think improvements in our methodologies and how we use it. So things such as synthetic data that allows us to get data that maybe we wouldn't have had access to before, and our ability to work with that.
And Sylvain, I know you're on the hedge side. Do you folks trade pretty much anything that has a bid and an ask, or are you folks focused on certain asset classes, and where are you sort of using alt data the most, and are you into digital assets yet?
We're not really in digital asset, but we trade cash equities, we trade options, we trade futures. I think if you think about the history of alternative data, as far as I can say, I think the epicenter of that was equities. I think that's also what Toby said. Like a lot of the initial uses were there, and now I think it's sort of expanding everywhere, right? Trying to use like alternative data to forecast commodities, to forecast FX, to forecast anything, right? But I think what we've seen in terms of like how we think about alternative data is that like if a data is clean, it probably has no value, right? There's a sort of theorem that like it's because data is dirty and because we have to put effort into it that we can extract some value, and basically the alpha that we extract thanks to this data set is a compensation for the effort we put in, the ideas, the uniqueness is how we've used that data and so on. And that's sort of what has guided how where we look to mine new data sets, right? It's if we think there's a data set that everybody is using, we'll probably look somewhere else because we want to have stuff that's overlooked, or that's different, or that's additive to what we already have, and so on. And that has guided a lot, where we go, like whether it's like credit card data, whether it's like geolocalization data, whether it's exchange data, whatever it is, right? We've always tried to either we have an idea that we think is different for how to use the data, or we've tried to sort of find data that nobody else is using, and generally it means there's a cost to using that data. It's not easy, but we've tried to go in that corner of the the map in terms of alternative data sets that are available.
I echo some of what he was just saying there. The data is rarely just going to be a silver bullet and serve the answer right up to you. But that doesn't mean it's not valuable. That can mean it's more valuable. And it really is developing the skills to think about what questions should I be able to answer with this data? And then can I come up with a good approach to do that? And so, some people may pass on some data sets because it's not completely obvious. Our analysts typically are using multiple data sets to kind of piece together the solutions to these questions. And I think that's that's of increasing importance because if it's clean and simple and it just serves up and is put in the right direction, it's going to be hard to drive value.
Yeah, it's priced in, right? The information is in the price, and there's no alpha left. No, totally. And I think your point about using a combination of data sets is also really important, right? Very often, one data set alone is like it's too weak, but if you can match it with some other data set, you can combine the information. You have like a data sets about plant locations, and you have like another data sets that you can that maps onto it. Then suddenly you have something that's really interesting.
That's a good point. Usually I talk about sort of the network effect in data. You have 7 columns. Sometimes when the 8th column comes in, it sort of lights up the whole data and makes sense overall. Somebody who only has that 8th column cannot make as much sense. There's a question around ESG. Let me broaden that a little bit. I think it was directed to Sylvain. So maybe you can talk about if you have an ESG focus, what's your wish list around an ESG data set, and then maybe Toby and then Steve can answer as to what they're producing, and we can talk about whether there's a gap between what the consumer wants and what the producers are producing from an ESG perspective. So Sylvain, do you want to start us off?
Well, I think the ESG landscape is obviously really, really interesting, right? So a lot of the initial data sets where firms talking about themselves, so self-reporting. And obviously, if it's firms talking about themselves, they might have biases, right? In particular, they might talk about themselves in a rosier way than what's real. So a lot of the work that we're doing is basically trying to bypass the self-reported data sets and do the direct measurement ourselves. So using alternative data sets where you can actually measure the amount of emissions that a firm does, the amount of, the type of research that it does. If it's a pharma company that is trying to solve the, deadliest disease in the world, does it try to, so trying to answer questions with a direct measurement rather than relying on the firms themselves. And so it's a real, again, there's no shortcut, right? You need to do the hard work, and you need to have a data science mindset. You need to do primary research, and that's sort of the way we've taken to sort of really think hard about what are the metrics that we want to track about firms that we think reflects the E, the S, and the G. And then find the data sets that can help inform those metrics that we want to track. I mean, I can be more specific, but that's sort of the approach we've taken, a really data science approach to ESG.
Yeah, our data set doesn't directly really deliver any ESG signals. It to the extent that we can provide labor demand information around specific sets of companies, yes. So there are, if people have a specific set of ESG companies that they want to understand what's happening there from an individual company perspective or a sector perspective, we certainly can deliver insights to that. Where we're starting to gradually go, and this comes back to what was mentioned earlier in terms of using data in combination with other data sets. One of our major initiatives within the company over in the recent past and going forward, and I think one of the key things that data vendors need to be moving towards more significantly is combining their data with other data sets. So we are starting to do that in and around, and one of those areas is ESG focused, and so we're looking at skills and skills data and wage and salary information, other kinds of data sets that we can bring in, demographic data within a company to get a better sense of some of the people aspects around ESG and hiring practices and employee practices. So we're doing that. I think one of the other areas that we're starting to focus on too is some of the issues around wages and salary and income and equality and job opportunities and career tracks and developments for different regions and populations and different kinds of socioeconomic issues. So we are certainly focused on that, but it's more of a sort of secondary beyond just the primary sort of heart of the target is labor demand, but certainly that can extend into lots of other specific kinds of use cases, ESG being one of them.
Yeah, no, makes sense. I was going to actually ask about demographics, so you addressed it partly. So what the government publishes, the payroll numbers, they're not even broken up by gender, is that correct?
They are, there are some data sets there, but in terms of the monthly payroll numbers, it's looking more at unemployment by race and gender and other kinds of things. So yeah, and there are other aspects of BLS, the Bureau of Labor Statistics, that does provide some of that. But again, it's lagging and it's survey-based data, and there's all kinds of other attributes around it. So it has some value, but it doesn't provide a perfectly complete, accurate, and timely picture of what's going on in the job market.
Right. So partly, it has policy implications that the government should be providing more sort of granular, cleaner data, perhaps. And Steve, I know you folks are sort of going up that insight pipeline, if you will. So you're producing more insights around ESG. Is that fair to say, or how would you characterize it?
I wouldn't say we've kind of solved that problem yet, or made it a major part of our product. But when we've thought about it, we thought about it from kind of some similar approaches, which is right now there's nothing that prevents someone from saying we're ESG focused or making claims about their greenness or what have you. And so when we think about it, we're trying to think, are there ways we can use data to actually validate claims and really measure how these companies would fit into the ESG framework. So when there is eventually, I think there's going to be greater scrutiny of these claims. There will be a systematic way to validate it and say, yes, we did this work, or we were able to establish that these things are true or not true.
Somebody has a question around raw data and does it need to be dirty? This gets to sort of the analogy I make, right, with respect to if you want to make a fine meal, sometimes people say you got to go to the farmer's market, buy organic, and it shouldn't even be washed because the chemicals that wash the vegetable can potentially, but then it's time consuming. So if you're doing some high frequency or you don't have the staff to sort of do it, you would rather get that meal kit or the frozen vegetable, right, and so on. So the velocity of decision making on the portfolio management side increases. So I think there's a bit of a trade-off there. So maybe all of you should address that a little bit, sort of the granularity and the dirtiness of the data. Maybe then you can mine your own diamond from it, type of thing, to use.
Yeah, maybe I can jump in on this one. So I think you put it well. So there's definitely a trade-off, right? I think on the one side of the trade-off is you need to have some sort of data input diversification. If you you need at least one data set to work to pay the bills, to be sort of a jackpot. But the heat ratios are not that high. Again, you have some data sets that the data provider tells you it's great, it's amazing, all the other hedge funds are using it, but it's a liar's market, it's a liar's game. You don't know whether it's true unless you put the hard work, unless you've spent some time cleaning the data, matching it, and so on. So and I think like the heat rates are reasonably low, right? So that's on the one side. You need to have quite a few data sets to try over a year, so that at least one or two or a couple are great, are really insights that add value compared to what you already have, and you generate alpha and you pay the bills. So I think that at one side, but on the other side, we hedge funds. Basically, we for IP reasons and so on, we want to keep the number of people limited to some extent. So the question is always, how do you scale up? How do you organize your team? How do you recruit? How do you pay people to make it work so that you can actually scout the right data sets? You can, ingest, you can do the trials, the proper, back tests and other statistical tests, and the proper, productionization of those things. And it's hard, right? So you need to scale up. And I think for a lot of firms on the buy side at least, but I think it's more general than that, obviously. But for the hedge fund, it's been like, they were used to be very secretive, very small teams, a few people with like some intellectual property. And I think today it's completely different. You have large teams, people with complementary skills, they collaborate and so on. And that's been sort of the response to that tsunami of alternative data sets. But it's still an open question of how you find the right balance between with that, and again, it's a trade-off, as you put it.
Yeah, I think when you talk about working with the data, or is how dirty is the data, you can look at that in a couple of different ways. So, sometimes the cleansing of the data is just going through the data itself and saying, okay, are there things that are incomplete, out of order, labeled in inconsistent ways, and that's kind of the pick and shovel work of cleansing the data to make it usable. Not everyone wants to do that effort. But that's one way to add value. But the other ways, though, is even after you go through that, there can be a lot of work and value in saying, okay, now that we have this data and it's structured in a way that's easier to work with, are there things we can do to take out biases? Are there things we can do to introduce new data to make it scale better? And then trying to what. Now that we understand this data better, are there particular types of questions that we may be able to answer other than just a straightforward forecast? Maybe it provides an insight into something else that explains other things we're seeing. So I think when we talk about, working with the data, messy data, it really goes into lots of different avenues that I think you can work on and add value with.
Yeah, I think that's a good point. And as I said, we sort of, our products really sort of run the gamut from very, very raw to very, very refined. So we're sort of agnostic on where is their value. I think there's, and we're obviously biased, but there's value sort of up and down. It just depends on, going back to what Steve said earlier, sort of what's the question that the user, the client is trying to answer, and what are their capabilities, and what type of use case do they have for the data. And in certain cases, a large quant fund like Sylvain's is absolutely raw, is the product there that is going to deliver the value and allow them to obtain the most value from the data. Somebody else further down, whether it's fundamental discretionary or private equity firm, might have a smaller coverage universe, or they may be interested in a certain sector or geographies or companies, specific concentrated fund. They're going to want, and they may or may not have the capabilities to work with the raw data set itself. So they're going to want much more refined products that are going to be derived work or analytics files or something that is much more valuable to them. And we price it accordingly. We deliver it different. So we really run that spectrum depending on what the use case is and what they're trying to do with the data, and walk them through. If they come to us with either not really knowing what it might do or a variety of things, we'll work with them to help them figure out sort of what makes the most sense. We've worked around a lot of sort of the landscape around capital markets. So we can help people through that process too.
Yeah, thanks, Toby. And somebody asked an interesting question. Let me sort of weave that into what you just talked about. Sort of on the one hand, you want to deliver value. On the other hand, there's this issue of pricing as well, right? So how do the vendors, Toby and Steve, sort of think about it? And from Sylvain's perspective, some things are better bought, some things are better done in-house. And I think one of the gentlemen asked the question, is there value to actually giving away some of this data? Maybe it's something dated, it's older data to farmers or to other folks from a socially responsible standpoint, which actually brings up an interesting thought. It gives you, the vendors, this ESG patina, if you will, right? You can say now you are wearing that ESG hat because see some of this older data that the portfolio managers cannot perhaps use anymore. It might be of value to give it to NGOs or give it to farmers and so on. I think that's an interesting question. I think they're talking about microfinance and these other things. So if you want to weave in, it's a complicated question, pricing as well as sort of.
Pricing is a law, it can be its own session for sure, just to even scratch the surface. But so to answer the question specifically, we do give away some aspects of our data, some very specific analytics, for example. So we publish on our website every day what we call the link up 10,000, which is the aggregate labor demand for the 10,000 global employers that have the most job openings in the US. It's very much a macro signal normalized. We put that on our website and publish and update that on a daily basis. So that's accessible. With our partnership with S&P, we publish every week the S&P 500 Link Up Jobs Index, which is at the index level and then down to the sector level. That's published on a weekly basis for free. So there are some aspects that we do give away. We will give our data away to certain academic use cases around for research purposes. But generally speaking, we don't have really a sort of freemium model at this point where we give away a portion of our data and then hope that they buy some larger, something sort of an upsell opportunity. I wouldn't rule that out, but that's certainly that's not part of our model today. I think what we do give away today is much more sort of giving some insights into the job market at a macro level to help people understand what's going on, particularly in this, in the last year and a half so around COVID. Labor demand has been very much in focus. So that's an area where we just feel like we want to be exposing that data to people to help them understand what's going on in the job market.
Steve, how do you think about pricing and sort of giving away some data as well? I mean, do you guys feel like on the inside side you have pricing power?
Yeah, so giving away data is probably something that wouldn't work with our model, because our product is the analysis and the insights that come from the data. So that's what we sell. And yeah, I think we do have, pricing power in that regard, and it goes up with, the more complex it gets and the more questions we're able to answer for clients. The data relationships we have, and we have multiple dozen relationships, we're typically working with a partner and we have the rights to use that data for certain use cases. So there may be some exceptions, but for the most part, we're not really producing the data in the same way Toby is. So we don't really have the ability to just, give it away to people outside of our, our defined scope of work. If that makes sense. So typically the way we present data, it's kind of as a backup to what we're doing with the research. Almost it's kind of a show your work type of way. So, the client would get a full report where the analysis has been done by the analyst, presented very clearly, and they'll typically have access to some visualization tools or the data through an API, but it's structured by the analyst in a way that says, hey, here, which is just kind of dumping the raw data and saying, do what you want with it.
Sylvain, how do you think about it? You could steal a page from Ray Dalio's book, right? He's giving away a lot of management advice and other things, right? So he would say he's giving away things, but not buy and sell signals potentially. So, I just thought of that, but go ahead.
Well, I mean, the point I should say is like sort of re-explain a little bit what quant is. So a quant fund like us, we don't make discretionary decisions. Everything goes through our model, right? The model that aggregates the, 120 data feeds that go into this, and then do the predictions on the asset return, right? And so when we do a trial of a new data set, we cannot use that data in the model because it needs to be plugged in, it needs to be productionalized. So when we do a trial, the only thing we can do is for the back test that we're going to run, right? It's not going to go into production unless it's been properly tested. So those trials, that's when we have this moment where we need to actually do a back test. And so generally, when we talk to data providers, we say, okay, it's going to take a lot of effort for us to take your data, but please, work with us to help us have the most conclusive backtest we can do. And if that works out, then it will go into production. Then we'll have daily updates or more frequent updates, whatever it is. But it will be actually using it to inform the positions that we take on behalf of our clients. So this trial phase is really important, but at the same time, we can only use it for the trial. There's nothing that goes into the model. And so in general, that's when we have these discussions with data providers where we say like, these trials, can we make it free? And generally, I think we've had the understanding that like, we'll have, free data for the trials, and then we'll pay once we've backtested it and goes into production. So I think that's been sort of the way we've operated with a lot of providers. And then after that, once we decide to buy the data sets, then we have an idea of like how much the data is worth to us. And that's where we enter negotiations with the data providers to sort of say, hey, like, this is the price we'll pay, right? Obviously, there's no real open market for data sets, right? So very often, you don't exactly know who's buying it, and the prices may be different depending on the people. But I guess, there's, for us as quants, there's these two phases where we need to go through the trials before it goes into production and before we can actually use it. And unless we use it, we don't derive any value from it.
Yeah, that's a good point.
I should have added that. I mean, for trial purposes, it's a free trial. That's not even giving away data. That's just allowing somebody to get their hands on it and evaluate it for a purchasing decision. So I should have included that. But
and then there's a NDA, and then if the trials doesn't work, we want to have a very good relationship with data providers, so we'll obviously delete all the data sets, and that's that it operates very cleanly, but it's just that like the business model of quants is really different from the business models of discretionary, where they don't have this requirement on backtest. That's really the sort of a quant fund is defined by the backtest it runs.
Right, but that also calls for this follow-up question, right? So, Sylvain, if you're 100% systematic, when do you say the regime has changed so much from a risk management standpoint that you're going to override the signals? And that also for the vendors, I would say, is there a field of use label you would use, right? Because last year we saw the data change dramatically. So somebody using a machine learning model may say, no, I'm going to override it because now all this new environment, new data is very different from what I trained my model on. So how do you sort of think about that from an override perspective? And for the vendors, how do you folks think about sort of a field of use, right? Sometimes they say, don't use this and drive, right? You can use this for partying, but not for driving, for instance, right? To use a poor analogy, but.
I mean, I think there's 2 points on this, right? The first point is like, quant funds have a different view on the markets, right? There's some funds that think like value is a law of nature. It's like, it's physics, it's a law of nature. If the price is cheap, if a company is cheap, the price will go up. If a company is expensive, the price will go down, right? I think we're more on the adaptive side of things where, there's a complicated system, there's a lot of shocks, and you want to adapt. So crucially, we take into account that things are non-stationary, there's regime shift and so on. And then part of our model, our model is adaptive by itself, right? We don't necessarily need to sort of say that, please do this. We'll try to, there's some learning aspect that make it learn. Now, when there's a huge regime shift, there's a huge shock. There's COVID, 3 days in March 2020. I remember those days. We lost some money, and it's what you want is like not just that like you're losing money. Is that like you want to understand how the model is going to rebound, what are the positions that it's going to sell and buy, or whether it's not going to do anything, to sort of be in the best position the following days once the new information is being digested. And so we build models that are adaptive. Shocks happen, and we want to have the best best model, best data to go forward with that. Now I should say also that like when you have shocks like this, it sort of open our eyes in terms of like where are the holes in our model, and what are the new data sets that we need to look for to be able to plug that holes, right? And that's also a lessons in terms of like data scouting and new research and so on. So it's from a researcher point of view, crisis is already always very interesting because it gives us new ideas.
That's good insight, and I would argue the physics actually changed in January, right, with the whole GameStop thing as well. So that was a new effect. But go ahead, Steve. Do you folks?
Well, I want to say, the question you're asking is one of the reasons why we run the business the way we do. I'd say the relationship between data and the companies fluctuates regularly. Some of that may be due to changes in the data, but some of that's due to changes at the business, right? They may be changing strategy. They may be running a type of promotion. They may be looking for different distribution channels or revenue recognition. All of these things strengthen or loosen the relationship at points in time between the data and the target variable you're trying to get at. And so, that's the job of our analysts, is to understand that changing dynamics. So when physical stores were being closed, their job was to understand this particular data set skews more towards online. So maybe the spike is greater than I would expect. And how do I adjust for that? Or, or converse, this data set doesn't have an online component to it. So it's probably worse than it suggests. And then the ability to understand, well, what is happening with that company? How are they responding? And then to be able to put it into context. So that's not unique, that relationships would change. I would say it's actually par for the course. And that's where you really need to know your data, and you need to know your companies and be able to bridge that gap.
Toby, you want to add to that?
Yeah, I think we will help our clients understand the nature of the data. So we're very transparent about what it is and what it can do and what it isn't and can't do. So we're very, very upfront on that, as Steve said, helping people sort of, we understand our data. We want to make sure our clients understand the data and what it can and can't do. I think what we, and then to the extent if they need it and want it or looking for advice on sort of these kinds of signals or these kinds of use cases or these kinds of strategies around it, we will weigh in if we have a viewpoint on what problem they're trying to solve or question they're trying to answer. But beyond that, we're not necessarily going to constrain the use case around the data, other than a couple of, in the data license agreement, some sort of larger fundamental aspects around what they can and can't do, and you know, reselling the data, for example, or building derived work and commercializing that in some way, unless it's explicitly you know, permitted in the agreement. So it's much more sort of at a fundamental level as it relates to the data. We just want to make sure they have a good, accurate sense of what the data can and can't do, and make sure that we are supportive of that and in alignment with that.
Yeah, one last question, and then we'll go to closing comments. I think we're down to the last 5-6 minutes. So how about US versus sort of non-US, in particular emerging markets? Is alternative data more valuable in emerging markets now, or is it the other way around? Sylvain, how do you think about it?
Well, I mean, obviously, you know, if you have a data-rich environment like the US, the next data set is less valuable than like if you have a data poor environment. You don't have a lot of reliable information, and so obviously, like there's a lot of things, you know, where you know, the big firms, the big data providers, that they're not necessarily they have data for the US. Then when you talk to them, you say, okay, give me the same data for Europe and so on, and always like emerging markets is a little bit down the priority list, and it takes time to cover that. So I think it's and then you have China, which is also another El Dorado in terms of like exotic data set, and you know, if you don't have anybody that speak Korean, Chinese, and Japanese, like it's becoming harder and harder to get those interesting nuggets out there. So all this is a challenge, and I think again it's going back to the point I was trying to make in terms of the human capital, right? So how do you build the team to exploit those opportunities in those corners where you have less information, where it's harder to get it, where but it's also where it's more exciting to get it because the returns to that extra data set are higher, and in some sense you want to be a bit contrarian, right? You don't want to do the same thing as other people do. You want to really pick your fights, and I think that's what makes it interesting.
Steve, a quick comment around US versus non-US?
Yeah, I'd say there's a lot more availability in the US. So in that regard, if you can find a good data set that's international, you're probably a little bit earlier with it. And that always has some advantages. But overall, I think that, you know, the types of data we're working with and the growth in data we're still very early in it. And so I think you're going to see new things coming in the US. The one other thing I'd say about international versus the US, I think especially if you look at like Europe, you know, they were probably a little more out front in terms of consumer protection and some, you know, kind of rules of engagement with data. And I think that the world is moving that way. So you can actually learn a lot by looking at this international data. I think like the concept of consumer permissioning is going to become a much bigger issue here in the US. And so you'll probably see, you know, the types of data change up here, and looking what's happening in other parts of the world will probably give you a better roadmap for where to be looking.
Toby, you do any non-US work or? We do. So we do index jobs globally, about 180, 190 countries. Definitely we're overweight US and English speaking and developed countries and economies, but we are very much global. And it's one of the challenges that we have as a business. We're investing heavily in expanding our coverage universe and globally, and there's equal value between adding a new emerging market or you know, deepening the coverage in a developed country, and in the U.S. We're very far down into the deep long tail of company size, but there's sort of value across all of those, and so it is one of the challenges for us is directing those investments, and we're expanding our coverage as rapidly as we can, but it is a tough challenge because there's value really anywhere we can find labor demand signal. It's valuable to users.
Yeah, I think we're down to 2 minutes, so why don't we finish with a closing comment, 1 or 2 sentences each, gentlemen. So start with a do or a don't, some advice to the analysts and the portfolio managers in the audience. Steve, you want to go first?
Sure. I guess what I'd say is we're at an interesting time where we're seeing an explosion in the amount of data that's coming to market. At the same time, the regulatory environment is still being structured. And so I think if you're thinking about data you want to invest time and money into to really get good at it and understand it, I would be thinking about, is this, especially if it's consumer data, is it expressly consumer permission? Is this likely to hold up in the changing regulatory environment a year, 2 years from now? Because bringing on new data is a lot of work and it takes a long time to get good at it. So I think you want to make sure if you do that, it's going to have staying power and not put you into a gray area.
Toby, a quick piece of advice?
Yeah, I think I would echo that, and it has been a really interesting stretch, and sort of the first 5-6 years of being in the alternative data space, and we very much see the pace of change accelerating and the amount of change that's in front is. At the same time, there's this massive explosion of data. There's also a lot of changes going on around use cases and deliverability and accessibility and consolidation and new entrants. So it is, it's been a really interesting period of time, and we certainly expect that to continue going forward.
Sylvain, you get the last word.
Yeah, to me, there's this intersection between data and machine learning, or data automation, or you want to, as Steve was saying, you want to understand the data, you want to understand the biases, but you also increasingly want to use machine learning to accelerate and improve the data ingestion, the data automation, and so on. And I think this, being able to combine that with the right people, I think that's the ground, really what makes a successful team. So yeah, that's the new trend I see, like machine learning and data automation helping some of the things we do.
No, absolutely. The amount of data is only increasing, but thank you very much, gentlemen, for your insights, and thank you to the audience for attending. Let me do a virtual show of hands here, and thank you, everybody.
Excellent.
Yeah,
Thank you. Thanks, everyone.